Hi everybody, Ken Heinz here, HFR President with the HFR 500 April 22 Performance Snapshot. April was a good month for the HFR 500. The HFR 500 posted a narrow gain in a month where equity markets and bond markets posted significant declines. The S&P 500 posted a decline of about 9% for the month, while the NASDAQ composite declined about 13% for the month, the worst month since 2008 for the NASDAQ. Bonds also declined in the month of April as interest rates rose sharply as a result of generational record inflation. Through all of this financial market turmoil, macro hedge funds led performance industry-wide and for the HFR 500. As I mentioned in the previous slide, combining the April declines for the S&P and the NASDAQ with steep losses which had already occurred in the first quarter makes the start of 2022 one of the worst starts, or the worst start for equity markets to a calendar year in over 40 years. At the same time, interest rates are rising sharply, and it's really the correlation and the breakdown in correlation between equities and fixed income that really contributed to a challenging environment and heightened volatility across financial markets. You can see here that the HFR 500 macro index has led performance not only in April but through the whole year, and has the best start to the year that we've seen in the history of the index, with a gain of 15.5% in the first 4 months of the year. As I mentioned in the prior slides, the HFR 500 macro index has led performance not only in April but thus far through the financial market volatility in the first 4 months of the year. You can see here the HFR 500 macro composite, which includes all macro strategies, has gained more than 5% in the month of April. You also see that the overall composite of all types of strategies posted a narrow gain of 16 basis points, which is a significant outperformance of the NASDAQ composite, which fell 13.25%. The HFR 500 relative value index posted a very narrow decline of 10 basis points, while higher beta strategies, event-driven and equity hedge, posted a decline of 2.2 and 3.25%, still significantly outperforming the steep decline of the NASDAQ composite. Going one level deeper on April performance, you can see that the top areas of SubStrategy performance for the month of April with a clean sweep of macro SubStrategies. You can see here the HFR 500 macro commodity index led SubStrategy performance with a gain of 6.8%. The HFR 500 macro multi-strategy, which includes both systematic, discretionary commodity and discretionary thematic, as well as currency funds, gained 6.3%. The quantitative trend following managers in the macro systematic diversified index gained 585, whereas the macro HFR 500 macro currency index gained nearly 5%, so a clean sweep of top sub-strategy performance by macro sub-strategies. Again, all of these well ahead of the decline of 13.25% for the NASDAQ. As I mentioned earlier in the presentation, the HFR 500 macro index has posted the strongest beginning to a year or after 4 months in the history of the index, with a gain of 15.5%. And again, this compares quite favorably with the NASDAQ composite, which has declined 21.2% in the first 4 months of the year. You can see also fixed income-based relative value arbitrage strategies have gained 1.6%, whereas the overall composite has gained about 1/3%, again significantly outperforming the decline of the NASDAQ or even other equity market indices in the thus far for the year. And you can see that even higher beta strategies have declined a little over 4% and nearly 8% for event-driven and equity hedge. Those were the best area of performance in 2021, but even so have significantly outperformed the NASDAQ composite thus far in 2022. Drilling down one more level to the top areas of SubStrategy performance thus far for the first 4 months of 2022, you can see that the drivers really haven't changed very much, and it's a clean sweep of macro and energy-related drivers of performance in the first 4 months, led of course by HFR 500 macro commodity index with a gain of nearly 40%, a gain of 19.2% for the quantitative trend following HFR 500 macro systematic diversified index, 1065 for the macro multi-strategy, which combines all different types of macro multi-strategy, including CTAs, discretionary thematic, discretionary currency, and discretionary commodity. And then finally, a gain of 8.7% for the equity hedge energy basic materials index. These are the top 4 areas of SubStrategy performance thus far in the first 4 months of 2022. There's a lot of great information on the Investable HFR 500 on our website. If you're watching this video, you know we do regular performance updates on YouTube, so please continue to watch these and subscribe to the channel if you like. Also, please download the investor guidebook when you go to the website. There's a lot of great information on how the HFR 500 represents a solution for common benchmarking problems that institutions experience when benchmarking hedge fund portfolios. And certainly, if you have questions or would like to set up a call to discuss the HFR 500 more, you can email me directly, Ken Heinz, or email HFR500 at hfr.com. Thanks. Look forward to speaking next month.